Welcome back. Let's show you what's happening with the markets. The S&P is coming back here from an earlier sharper dip at the open. The S&P now down about 1/3 of 1%. The Nasdaq also recovering. It's actually almost trading near the flat line. So big drop yesterday. Does appear to be trying to recover today. The Nasdaq comeback is led by Micron, Microsoft, Nvidia has turned higher. Palantir is now higher again. Netflix under pressure. Apple and Google and Amazon. Those are the ones that haven't quite turned green. Joining us here is Apollo Global Chief Economist Torsten Slok, and there's a big hot debate right now around what the Fed should do, what the Fed will do. Maybe that's giving a little anxiety to the tech trade this week in particular. What do you expect for December?
Well, I think the signaling from the FOMC members has been this issue that we've been debating for a long time, namely inflation. Are we done with fighting inflation, or are we not done with fighting inflation? And it's very clear that they are communicating, the majority of them, that we're not quite done with fighting inflation. So the data coming in still shows that inflation has been around 3% now for quite some time. The consensus expects that to be the case for the next 18 months. So with that backdrop, it's just really difficult for them to begin to cut interest rates in December.
So you agree with if they go with no move?
I do agree with that move, because I do think that the inflationary problems are still here. There's upside pressure from the dollar having gone down, and there still is uncertainty about how much pass-through is going to come through tariffs.
But so you don't take comfort in the fact that inflation expectations are totally under control, and the other part of their job is to make sure that the labor market stays strong and it's weakening.
Well, and the problem with the labor market is that if the BLS gets to work by the middle of next week, normally the employment report is measured in the week of the 12th, which means this week. That means that they might begin to measure the labor market closer to the Thanksgiving week. And that begins to open up kinds of challenges that maybe we will not know even before January what is the true health of the labor market. And the final point is also, remember, we have no data for October. That means that the number, when they count the labor market, they count how many had a job in total. And therefore, we will now compare that with what we had for September. So suddenly, the number that comes out in December will actually be a measure that it has to be compared with over a 2-month period. So there's a lot of things that become very complex when you begin to think about exactly where is the health of the labor market at the moment. But the good news is jobless claims have not been going up. Yes, Challenger Grain Christmas did show slight deterioration, but the bottom line still is the labor market is still holding up very nicely.
All right. Although the Journal today, this remarkable piece, companies predict 26 will be the worst college grad job market in 5 years. What do you think's going on with entry level?
If you look at the data for the unemployment rate for people who have a bachelor's degree between the age of 22 and 27, what is really unique about that story today is that if you look at the unemployment rate for women, it's actually going down, and the unemployment rate for men is going up. So it brings to the table this very awkward discussion. Is AI only impacting men and not women? Maybe there's some of those who are computer science and coders. But the fact that there is actually a very low unemployment rate for women that are college graduates in the young 20 to 25 age group, it tells you that this narrative that, oh, no one can find a job because of AI, that's just simply not correct. Because if this were the case, jobless claims would be going up, and that's just not what we're seeing.
All right. The other one, I loved your chart today on Chinese exports, where they have found buyers in Asia to double the offset from the decline to the U.S. What do you think that says about not just the relationship between us and China, but what Chinese container shipments are doing right now, incoming supply, holidays, and beyond?
Well, it shows the remarkable adjustment that China has been able to make, partly to direct their exports to other countries. Of course, there's also something that ultimately likely ends up through other Asian countries in the U.S. But the bottom line is that China still, on the export side, has been doing surprisingly well, mainly because of the growth to other Asian countries. Growth in exports to Europe has basically been flat. Exports to Africa, exports to Latin America has been flat. It really is all the other Asian countries that have picked up the slack now that exports into the U.S. have been going down.
By the way, Nasdaq positive, so the dip is getting bought. A lot of people were wondering if that would happen after yesterday's big tumble. It looked like we were going to be down again. When do you expect the AI, or do you think it's happening, to AI to be reflected actually in the data?
Well, and this is why the discussion with Dan Ives a minute ago is very important, because the expectation now is that we should be watching very, very carefully. When is this showing up in the S&P 493? It's very clear that the Magnificent Seven are doing very well, but if you look at earnings expectations since the beginning of the year, they are up for the Magnificent Seven, but they're actually down for the S&P 493. Likewise, profit margins up for the S&P 7, and down for the S&P 493. So now we got to see the S&P 493 begin to benefit from AI, and we're beginning to see some signs of that. We heard a few anecdotes through the last earnings season, but it's very clear that the burden now in the AI story is on. Now we need to see more earnings growth. We need to see that, quote unquote, the rest of the K-shaped part of the corporate space, namely the S&P 493, actually begin to benefit as a result of the AI.
But you think
revolution.
that's coming?
I do expect that we will begin to see some of that. So I do expect a rebound in the economy next year. Also, let's not forget that the one big beautiful bill, according to the CBO, is going to add almost a full percentage point to GDP growth because of accelerated depreciation. So we are going through a lull in the economy in this quarter and next quarter, but it is a Nike swoosh where things are basically getting better. This is our expectation. This is the consensus expectation as we go through 2026.
And that's partly why you would hold in December, I assume.
Because I'm worried about what that means for the upside risk to inflation,
right,
which is already at 3. And if we're now concluding that maybe we have some tailwinds, the trade war is more behind us. Liberation Day is now 8 months ago. We also now have more tailwinds coming from, of course, the financial conditions still be relatively easy, and the one big beautiful bill helping going into next year. There's a lot of tailwinds building for the U.S. economy.
Where do you think the inflation is going to show itself? In services?
So I think services, because ISM prices paid have been going up a lot in the last 6 months, and this means that the input costs in production for service sector companies have been rising very significantly in the last 6 months. So given services makes up about 60% of the CPI basket, the risk is that it's not only goods and tariffs that are lifting inflation, but it could be that services, and this will be my prediction, that services will all begin to show upside pressure as we get into next year.
Hasn't really happened this year yet, but okay. Torsten, thank you.